1. Brothers, thanks for watching this webinar. Today we're going to talk about the use of a reserve study. This is one of the best practices for Phi Gamma Delta house corporations. And a reserve study is going to help you plan for repairs and replacement of major components of your house and the planning for capital expenditures. One of the biggest issues facing house corporations today is underestimating the capital needs that your house has, or delaying or ignoring those capital needs, which can result in bigger maintenance issues becoming larger remodeling issues in the following years, or remodeling issues becoming obsolescence issues necessitating a rebuild of your chapter house. So getting a handle on the capital expenditures and needs of your house corporation is of critical importance. And a reserve study, this tool, will help you ensure that you are planning for and understanding what the full capitalization needs are for your organization. Another thing that this tool will do will be able to enable you to calculate the full cost of operating the house. So this can be factored into rent calculations. Rent, of course, shouldn't just be about mortgage, insurance, and utilities and dividing that out by the number of men sleeping in. But you need to factor in the cost of wear and tear of the components of the house. With the information that you're going to get from this reserve study, you'll be able to do that. And then you'll be able to charge brothers for their share of the use of the housing asset annually, rather than pushing that cost out to future brothers. Now, one of the things that I'm sure you're going to start to think about is, wow, this is a big project, and we get it. It can feel pretty daunting to start this, but don't let this deter you. Even if you use some estimates for the values of your items in your house, the cost of replacement, that's a good start and will at least get you started in this journey. And it's, of course, better than doing nothing. Then, over time, when you are dealing...
The broadcast is now starting. All attendees are in listen-only mode.
You're fine, Steve. Keep going.
Okay. Sorry about that, brothers. Then as you start dealing with different vendors, you can start asking those vendors to give you estimates of replacement or repair of certain items as time goes on. So don't think that you have to go through this process, or to do this process that you have to contact a roofing expert and a boiler expert and get estimates for cost of replacement. You can do that over time, and you can get this updated as quickly as you feel you have the resources to do so. Finally, one of the things that might occur is that when you get this completed, you may see that you have some capital needs that far outweigh your cash on hand or cash in the bank. And that's unfortunately a common problem, but it's not going to be, shouldn't be something that causes you to not want to continue with this process. Again, this information is important, it's powerful, and it's powerfully important for the house corporation to understand in the future how they need to charge for rents and what the capital needs are going to be to take care of the obligations of caring for the house. So again, don't be surprised when you get done this if there's a difference between the amount of cash you have on hand and the amount of cash you really should have been saving all along. Okay, so let's, as we get ready to actually look at this document, remember, of course, that this is all going to be based on the number of brothers that are going to be living in the house, or beds, whichever you want to use in your calculation. Of course, one of the things that's common within the fraternity is that not all the brothers are living in the house, but all brothers generally have access to the house and are benefiting from the house, whether they're coming for chapter meetings, whether they're coming for chapter meals, whether they're coming for social activities. And for this reason, it's really important that as a house corporation, that you're assessing some sort of charge to non-resident brothers for their use of the house and the wear and tear that they cause or contribute to in the course of being a member of the fraternity. So if your house corporation doesn't have an out-of-house or parlor fee, sometimes it's referred to, type of charge for non-resident brothers, that's something that we also want you to definitely consider taking a look at, so that those brothers can pay their fair share of the cost of the house as well. Okay, so now let's take a look at the reserve study that's on your screen. Basically, what you're seeing on the left edge is a list of the assets of the house corporation and the house itself. So what we're trying to do here is identify the major components of the house, and you can obviously customize this. There may be some things that aren't appropriate. You may not have an irrigation system. You may not have your own parking lot, so you might not have driveways or asphalt. So obviously you can change the items or just put zeros in the amounts for items that don't apply to your house. Then you'll see in the next columns going across is the expected life of that asset, the current life of that asset, and then, of course, the remaining life. So this is a useful tool for you just in itself of understanding, hey, we expect our roof to have a 30-year life, and our current age of that roof is 15 years. So we've got roughly 15 years till we're going to have this $45,000 expense to replace the roof. Are we saving up money for that now, and how much do we have on hand to put towards the roof? And of course, there's no guarantee that your estimate of 30 years is going to be accurate. It could need to be replaced in 25 years, and it could last for 35 years. But you can see how this is going to help you just in planning purposes understand what upcoming kinds of activities, maintenance, or capital expenditures you're going to be having in the years ahead. Obviously, all these things are going to vary by where you are geographically, what type of materials were used in your particular circumstance. So the numbers that you see filled in here are not necessarily numbers that are going to apply to your situation. There's parts of the country where asphalt will last longer or have a shorter life because of harsher weather conditions. So you need to use information based on your area and the type of materials that you're using to make the determination of expected life. Then in the next columns, you're going to see that we have a total cost at present value, the amount on hand, and the balance required. And this is done through some formula equations, so this will calculate for you. And once you enter in the base data, and you're able, as you see in the top in the burgundy section, there's a spot there for CPI, the Consumer Price Index. So you'll be able to set your own rate of inflation, what you think you want to use for your calculations. So we've used in this example 2.5%. So this is going to calculate that if the present cost using the example of the roof was $45,000, 30 years from now, based on 2.5% inflation, you'll see in that far blue column that the estimated cost to repair or replace, the roof would be about $65,173. So again, that calculation is automatically made through the formulas in the spreadsheet for you, and then it breaks it down and says, so therefore, in order to meet that $65,000 expense in 30 years, we should be saving approximately $201 per month for the 30 years, and that accounts to about $6.71 per bed in the house. So that's how it breaks those expenses down. So even though it says room, it's actually referring to beds in the house, and that's also up at the top of the screen, and you get to control what you expect the occupancy of the house to be to determine that calculation. So each of these items, as you can see, if we scroll down the sheet, will cover various aspects of interior parts of your house, your driveway, your fence, your landscaping, your irrigation system, sewer, and electrical. Going down further, you'll see life safety and security. You'll see your main furniture type items in your living room, your dining room, your bed frames and mattresses, desks and dressers if you're supplying those. There'll be some kitchen items. Again, these obviously are going to be very specific to your house, so you're going to have to determine if those are the right items that are applicable in your kitchen. And then going to your bathrooms. And again, we have no idea, obviously, how many bathrooms you have, so we've put in 7 of them, but you may not have that many. Your flooring by level, so that could be carpet or refinishing hardwood floors or replacing hardwood floors. Your doors, interior and exterior, your windows, boiler, furnace, air conditioning, and then we've given you a spot for other, and we've given you, about a half a dozen, 6, 7 other items to account for. Then at the bottom, you see your summary. And so what this basically, in this instance, says is that the assets listed represent about $591,000. The future value of replacement of these items, based on the varying life, is about $715,000. And in this instance, in this example, there was $294,000 on hand, with a balance to be collected over the remaining life of these various items of $420,000. And then how that works out per bed per month, per bed per year. And so now you can see that you can add or factor in those amounts as you're calculating rent. Now, of course, this has nothing to do with your mortgage payment or your interest payments, your utilities, or any other expenses. This is simply to maintain the long-term assets of your house. So that's what the reserve study is designed to do. In this sheet, there's some other tabs at the bottom for you. There's a details section that you can get a little bit of background information on just for the basis of how you're doing your calculations in terms of number of beds. There's a budget pro forma that you can use for purposes of planning and budgeting. And then there's a cash flow tab for you as well. But the primary purpose of our call today and the core of this is the reserve study component itself, and getting those assets listed, understanding what the current life is, what the remaining life is, and being able to look ahead and plan to have money to make the necessary repairs. So, brothers, here's the key takeaways that I want to give you for this for the reserve study tool. First is the tool is as good as you make it. So we recommend that you review this regularly, at a minimum once every few years, and do a complete visual inspection of your assets and make sure that you haven't added any new components to your house that need to be added to this study, and make sure that it's accurate. Get started. Even if you have no money in the bank right now for capital improvements, your house corporation's operating on a month-to-month basis with income coming in. Information is power, and you need to have this information so that going forward in the next rent or budgeting sequence, you can start to calculate in some of the capital needs that you're going to have to take care of the house properly. Another takeaway is to be sure that you're collecting something from your out-of-house brothers. They're benefiting from the house, and they need to be contributing to the cost of operating it. Brothers, thank you for your time today and listening about the reserve study, one of our best practices. Don't forget to visit the housing section of the FIGAM website under the Graduates tab to see other House Corporation webinar videos or to find other resources for your house corporation.